Do you really need a bank account to use Stripe? Or is there some secret workaround? A hidden path for the truly bank-averse entrepreneur? It's a question that pops up surprisingly often for anyone diving into the world of online payments. And for good reason. Stripe is a giant in the payment processing industry, a behemoth that empowers millions of businesses, from tiny startups to massive enterprises, to accept payments online. But the financial landscape is constantly evolving, and not everyone operates with a traditional bank account in the conventional sense. So, let's peel back the layers and uncover the truth about Stripe and its relationship with your financial institution. For many, the idea of setting up an online business instantly brings to mind the need for a bank account. And historically, that's been an undisputed fact. To process payments and, more importantly, to receive the money your customers are paying you, you've needed a place for those funds to land. A bank account, with its unique routing and account numbers, has been the standard, almost universally accepted destination for these digital transactions. It's where your earnings mature from virtual numbers in a payment gateway dashboard into tangible funds you can actually use. Stripe, at its core, is a payment processor. It acts as the bridge between your customer's payment method, be it a credit card, a digital wallet, or a bank transfer, and your business. When a customer makes a purchase on your website, Stripe securely handles the transaction, ensures the funds are authorized, and then, after deducting its fees, prepares to send you your money. This process is known as a payout. And here's where the bank account typically comes into play. The undeniable truth. Stripe needs a payout destination. Let's cut straight to the chase. Yes, Stripe absolutely needs a bank account, or at least a highly similar financial account, to disperse your funds. There's no magical workaround that allows your money to simply evaporate into thin air or materialize directly into your physical wallet. Stripe's primary function is to facilitate the flow of money from your customers to you. And for that flow to be completed, there must be a designated, verifiable financial institution ready to receive those funds. Think of it like this. If someone wants to send you a letter, they need an address. If they want to send you money through a payment processor, that payment processor needs a financial address for your funds. This address is almost invariably a bank account. Why the bank account is essential for Stripe payouts. The necessity of a bank account for a Stripe payout stems from several fundamental aspects of financial regulation, security, and the nature of payment processing itself. Regulatory compliance, KYC/AML financial institutions, including payment processors like Stripe, are bound by stringent Know Your Customer, KYC, and anti-money laundering, AML regulations. These regulations are in place to prevent financial crime, terrorism financing, and fraud. A core part of KYC/AML is verifying the identity of the individual or entity receiving funds. A traditional bank account provides a highly regulated and verifiable conduit for this process. When you link a bank account to Stripe, Stripe can perform necessary checks to ensure you are who you say you are and that your funds are going to a legitimate source. Fund settlement. When a customer pays you, the money doesn't instantly appear in your pocket. It goes through a series of steps: authorization by the issuing bank, clearing through card networks like Visa or MasterCard, and finally, settlement. Settlement is the process by which the funds are transferred from the customer's bank to your designated payout account. This entire complex system is built upon the infrastructure of traditional banking. Security and traceability. Bank accounts offer a robust and secure way to track and trace funds. Every transaction is recorded, providing a clear audit trail. This is crucial for dispute resolution, fraud detection, and general financial transparency. Without a formal regulated account, the security and traceability of your earnings will be severely compromised, opening the door to a multitude of risks for both you and Stripe. Integration with the financial system. Stripe operates within the existing global financial system. This system is heavily reliant on bank accounts for interbank transfers, automated clearinghouse, ACH, transactions, wire transfers, and other methods of moving money between different entities. Your bank account is your gateway to participating in this system and receiving your earnings from Stripe. What kind of bank account does Stripe need? Stripe is quite flexible in the type of bank account it accepts, but there are some key requirements. Ability to receive direct deposits. The bank account you link must be capable of receiving direct deposits, also known as ACH transfers in the US or SEPA transfers in Europe. This is a standard method Stripe uses for payouts. Matching currency. The bank account must be denominated in a currency supported by Stripe for payouts in your region. For example, if your Stripe account is set up for USD transactions, your payout bank account should ideally be a USD account. While multi-currency settlement might be possible in some cases, it often incurs additional fees and is less straightforward than matching currencies. Legal entity match. The name on the bank account must match the legal name of your Stripe account, whether it's an individual's name for a sole proprietorship or the registered business name for a company. This is a critical KYC requirement. Physical location. Generally for most countries, Stripe requires a bank account physically located in the country where your Stripe account is registered. This helps with local regulations and banking infrastructure. Virtual accounts, while growing in popularity, may have limitations or specific requirements depending on the country and the virtual bank provider. The payout process, from transaction to your account. Understanding the payout process helps solidify why a bank account is so crucial. Customer payment. Stripe processing. Funds held by Stripe. Availability for payout. Payout initiation. Bank processing. Funds in your account. Throughout this entire chain, the bank account serves as a definitive endpoint, the final destination for your earnings. Without it, the flow of funds cannot be completed. What happens if you don't have a bank account? If you attempt to use Stripe without a valid, verifiable bank account for payouts, you simply won't be able to receive your money. Stripe will process payments from your customers, and the funds will accumulate in your Stripe balance, but they will remain there in limbo until you provide a suitable payout destination. This highlights the critical nature of having a proper bank account linked to your Stripe account. It's not just a convenience. It's a fundamental requirement for the payment gateway to function as intended. Ignoring this fundamental requirement isn't a clever hack. It's a barrier to receiving your funds. So, if you're planning to leverage Stripe for your online business, make sure that a legitimate bank account capable of receiving direct deposits is at the top of your checklist. With that said, thanks for watching, and until next time.